All right, guys, welcome to this live stream with Nathan, Jester, and the team over there at Ariel Fx. So this is a smart money concepts kind of live stream where the guys are going to be looking at the markets here in the New York session. Now, I should mention that you've got a chance to win $100 if you stick around during the show. They will actually pick out somebody from the chat who answers a question and give you $100. So please stay tuned. Make sure you're watching this whole thing to listen for that question. And what else should I say here? Oh, look, you know, guys, there's a Trading Nut Funded Cup as well. If you are looking to test your skills out, then my sponsor, City Traders Imperium, are helping me run the Trading Nut Funded Cup. The entries close in literally 2 days, 15th of April 2022. So, guys, if you do want to take part in that, there's a link below the video, as well as a link to the arielfxtrading.com as well. So if you want to check out more from these guys afterwards, you can go there and do that. All right, folks, let's get on with it.
Good morning, guys. Good evening, good afternoon, wherever you are in the world. Hope you guys are doing phenomenally well. Thank you, Cam, for having us on. This is a pleasure. Guys, drop a one in the chat if you can hear me. I just want to make sure everyone can hear me and see me correctly. If not, then we can change some stuff up. Just want to make sure everything's good to go before we start. Awesome. It looks like everything's working fine. So, guys, hope you guys are having a great trading week thus far. I can't wait to go over some smart money concept-based trades with you. It is a little past 8 o'clock in the morning a.m. We are on Eastern time. We have 8:30 New York session open. So what I'm going to start with before we get into the active setups today is I want to start with a little bit of a trading educational section of this live stream. So what I want to start with is every single live stream that we do from here on out, I want to start with a theme. All right, and that theme could be anywhere from inefficiencies, could be anywhere from institutionally based sponsored moves, could be from market structure, could be from anything in relation to smart money concepts that we teach here at Ariel Fx. So this week, I'm going to do a whole breakdown on how to do proper top-down analysis. Top-down analysis oftentimes gets overlooked, and it's so crucial that we understand how to do understand market structure in a top-down analysis before really getting into the nitty-gritty of the strategy. So I'm going to share my screen here, and I'm going to get right into market structure. All right, perfect. Let me know if you guys cannot see this screen here. I'm actually going to start off with USD Swiss franc. Can you guys see this screen here? Everyone, just make sure you drop a 1 in the chat if you can see it. All right, perfect. So how I like to start top down. Doesn't matter what strategy you're trading, market structure is number one. It is essential to anything trading related. If you don't know market structure, doesn't matter how good your strategy is, it's still going to fail most likely. So we want to be starting with the daily and the weekly time frame. I oftentimes over the weekend start with the weekly just to see how the weekly time frame candle closed the prior week. And we can just clearly see here, higher time frame, we're in a massive downtrend. What does this mean? This means that, well, we don't really have to be necessarily looking for shorts, because if we were looking for shorts, then we would be looking for a pullback into premium price to short off. Well, that could take years to get back up into. So understanding that we're overall bearish on the higher time frame, we can look at these higher time frame levels of potential targets, meaning if we are to buy counter trend, where would we be looking to target? Where would we be potentially looking for a reversal? So in this case, I've identified this area of supply on USD Swiss franc at 9,600. Okay, so this is a level in which if I'm going to be buying this pair, I would like for price to come up into before selling off. If I'm looking to sell this pair, this would be the price level in which I would like to see reversal formations and distribution around this level to take this short. All right, we can also see that if we look way over here, we had the Swiss franc flash crash. This was a flash crash back in the beginning of January or 2015, excuse me, the beginning of that year. We actually created an imbalance between this wick and this wick here. We actually filled that very nicely. What else did we do? Well, we swept liquidity. These are equal lows. There's a lot of liquidity resting below these levels. So we have finally filled that inefficiency in January of 2021, and we've just been moving away ever since. So if we are to go short from with USD Chef, it's probably most likely going to be around 9,600. However, because of the fact that we already came into imbalance, we could easily just make a higher high here. We have relatively equal highs in here. We could easily just blast off. That's if the US dollar strengthens over the course of the long term, but we just have to understand where we've already come into and where we're likely to go. So weekly time frame in this direction, we are bullish. Obviously, we can go down to the daily. Current direction is bullish. I want to see this high being taken out. Okay, we have relatively equal highs. What are above each high? Liquidity. Okay, retail traders stop losses. Now, institutions and banks, they don't hunt just one stop. They hunt a group of stops. Why do they do that? It's not because they're mad at you guys and want to take your stop losses. The reason why institutions and banks target these levels of liquidity is because they have such large orders. They're the market makers. They're moving the market. So they're the ones who have to place all of those large orders at one particular area. So in order to do so, they have to take liquidity to provide themselves the liquidity in which to move in the overall direction they wish to trade, placing those large orders. So liquidity is resting above each of these highs. I suspect price to take out that liquidity. Even if it goes short, it should take out these highs because the institutions and banks have to come into these psychological levels, take all this liquidity prior to moving in the opposite direction to create liquidity for themselves. All right. So we can easily see here, 4-hour time frame, we are very, very bullish. Okay. We're making higher highs, higher lows. All right. So this is the structure on the daily time frame and the 4-hour time frame. So bullish, we should be looking for overall long positions to trade. Okay. So higher high, higher low, higher high. What happened in here? Well, I'm not going to get into, so much detail in regards to what happened in here, but an easy explanation is we swept liquidity coming into an area of demand that also came into an area of demand. But the point I'm trying to make is this higher low created this higher high. So with structure, we should not come below this level. And with smart money, I will be getting into inefficiencies, later on and stuff, but we actually did fill that to the exact T. We called that out in our VIP group, 9195 to the exact pip. And we've been rising ever since. We have created even more liquidity, equal highs. So that should be run. So we really should be taking out this high next, should not be coming below this low anymore. Okay. So the structure, higher high, higher low, looking to go long. Okay. Now, many people would say, well, okay, let me just draw on this really quick. Well, what if we do something like this? Is this considered a break of structure? Well, this oftentimes gets confused. I know this is not the example here, but what if price did something like that? Well, this is where we just have to be patient, because if we have levels of demand, levels of price that we most likely need to come into before reversing and going long overall, this is probably just an overall pullback. What we teach within Ariel Fx is how to identify the difference between an actual break of structure and just an overall pullback in the market to continue. Because many people would take this and be like, okay, I'm going to pull back and go long. But the smart people would probably understand that we have a demand in here, imbalance, and a demand price that needs to be mitigated from. Okay, that's why price continued down. I know we didn't break structure, counter trend, but if that were the case, I would be looking for price to pull back, maybe come into an area of supply to then short off. Because many people are looking at this as, oh, I'm going to trade the breakout. But in all reality, it's just a pullback in the higher time frame to then take this lower into the overall level. So before you get into whatever strategy you trade, whether that be smart money or whatever, make sure you're marking off these swing points so you know the overall structure in the market. We have a whole video series on YouTube. It's all free. You guys go check it out. That goes over market structure and our strategy as well. But it's so important to identify. So now let's just say we're looking at an entry from this level. This is actually a setup that we have within our community. And I am taking this long. I have a buy limit at 9266. Where would I look to target? And that just goes with looking at the higher time frame. Liquidity here, this could be a, our take profit, one of our take profits, but overall in the market on the weekly time frame, we're looking to come up into this supply. Okay. So what I would recommend, if you guys are new to market structure and don't really know what to look for specifically, don't look at the weekly and monthly and say, okay, we're bearish overall. I'm only going to be looking for sells. Well, yes, we're overall bearish, but you're going to be waiting weeks or months or even years for price to get back up into premiums to be able to sell. Look at the overall direction and understand that, okay, well, where are our levels that we could potentially reverse from? Go down to the lower time frame and look at then the actual trend that's occurring for the week. Okay, where could we expect price to go? What levels could be taken out? Where is the structure on the lower time frame? So obviously we identified the weekly to be bearish, the daily to be bullish, 4 hour to be bullish. We can trade this long as we understand the lower time frame swing points and can look at for reactions with those swing points as well. Okay, there's a lot more that goes into market structure. Unfortunately, I don't have a ton of time to talk about it, but if you guys are interested in learning more, check out our YouTube, completely free. We have a whole series on smart money concepts and structure-based trading. So that was sort of like one of the themes I wanted to talk about. I want to do one every single time we have a live session. Next week will be in time and price, and that will be featuring Aiden, which you'll hear from in a minute. But I wanted to talk about market structure. Guys, if you have any questions about this whatsoever, please feel free to drop it in the chat. We'll be happy to answer your question, or just message us personally on our IG or on our Telegram at Ariel Fx Trading, and we'll be happy to help you there. So now I want to just go over a few pairs that we're looking at for the New York session. I know we have about 15 or so minutes before New York session really gets going here. We actually do have news. If you guys don't know how to check news, go to forexfactory.com, and we're having PPI 8:30 in the morning, US dollar news, and we have Canadian dollar rate statement, monetary policy report. So it's really important that we're checking these red folders and understanding, okay, well, we're having news around certain times. They're most likely during times of high volatility, New York session, London session. In this case, New York session, because the US dollar and Canadian dollar. We can look for an excuse for price to push in a certain direction to achieve an overall target. So for instance, I'm going to go over AUD CAD really quickly. Okay. So AUD CAD, and this is a setup in which I am going to be taking. So this is a possible entry for you guys here, 94100. You want to mark that up on your charts, write it down, whatever you want to do. I am looking to take a short from this level. The reason why is I think that with the news, I don't trade news specifically. However, news is used as an excuse to create liquidity, to take orders, to move in the overall direction it was always intended to go. So we can see we have an area of demand that with a huge imbalance that has not been filled yet. We have equal lows. Price is pushing down. Okay, we're looking at taking this liquidity coming into this level at 9,300 psychological level, higher time frame on the daily. We can see, yes, we are overall bullish on this time frame, but higher time frame we're bearish. We did come into an area of supply, this major supply level. Okay, so I'm looking for short-term sells. Okay, short-term sells into maybe long-term buys to pull back higher time frame. Okay, so going down to the 4 hour again, I want to be getting into discounted price before continuations to the upside. So I know this is kind of going against market structure. However, the market already indicated to me today that it's most likely to go short. Now, before I go into why exactly, I want to go over where we're looking to target, because I always say exits are just as important as entries. So I'm looking to target 9,300, which is this area of demand, followed by this imbalance here. We also have our last point of selling volumes, this sell to buy, which I think we could come into around 9,266, maybe even a little lower. So in order to get down into these discounted levels, price has shown me that one, Let me go to the 30-minute. One, that liquidity has been grabbed. Okay, this high here, all these highs here have been grabbed. Many people were thinking, okay, well, we're breaking structure. We should pull back and go long. Well, that's most likely not going to happen when we have liquidity to take and when we're not in discount overall. Once a low or once a high is created, we automatically look at the low. Okay, where can price pull back into before going long again? Price is not going to just make a high, pull back a little bit and go long, most likely, because we need to be getting into discount. These banks, institutions need to be buying at the lowest possible price to get the best return, right? So I did not take a short from this level. This was an area of supply that we reacted from. Now I saw the reaction. I saw a miniature pullback. So you can see the higher high, higher low, higher high, higher low. Failed to make that higher high, and then we made a lower low in comparison to this low here. Okay, so that told me that this was a liquidity sweep, filling imbalance. You can see this imbalance move, this last sell, right? No buying was offered within this region of price. It was just straight selling volume, tapping back into that supply level, okay? Then we had the break of structure here. Now I'm just looking for an easy pullback back up into this last point of supply to then short off, to take liquidity here, come down into 9,300. Okay, so it's a little bit of a breakdown on AUD CAD. I have my sell limit placed at 9,400 there. But it's also important to understand when could this possibly become invalid. Now, what I would probably say in regards to that is if we come down and break this structure here, I probably would keep this just because, let's think about it. Lower low, lower high, lower low, right? We close below this level. This means that this is the lower high, which we probably shouldn't break anyways. Structure. So I would probably still keep this level for overall pullback and then a short off. However, if price does come down even further, if we have strong CAD news, because we have CAD news at 8:30, or it's 8:30 or 10. I think it might be 10 o'clock. Yeah, 10 o'clock. And if price pushes all the way back down into our overall level, 9,300, I'm not going to be looking to keep this entry open just because price has already achieved the target level in which I had already marked up in the first place. So this is still valid for now. And as I talked about, US dollar, Swiss franc, we came down into 91950 overall structure. Sorry, it's blurry. Overall structure, we're looking for that higher high now. We have the draw in liquidity, these equal highs. So what I really want is just an overall pullback to then go long. And where is that? 1 hour time frame. We can see that we have this huge imbalance that I want price to push down into before taking it long. This is not the best risk to reward in the world. However, based upon structure, this is a highly probable setup. Now, I also will be looking, if price does come back down into this level, I will be looking for lower time frame accumulation, lower time frame counter trend breaks of structure, liquidity runs, whatever you may call it, and then looking to go long to get a better risk to reward. But this is just solely based off of higher time frame structure, and I really do like this setup. Okay. And then obviously we're going to be targeting 955 and 96 for our overall levels. So now I'm just going to be going through a couple charts. Feel free to ask questions in the chat. We'll be happy to answer those. I'm not going to be doing a full breakdown on all these pairs. I'm just going to be going over what I'm looking at for the session. In regards to Euro USD, what I'm thinking is that we're probably going to be taking this low here, 1.08059. We're approaching this level, this low. This is probably a lot of liquidity below this low. This is I think since the start of March, daily time frame low. Yep, March 7th. Ultimately, I think we'll probably push down potentially to take out this low here and come down further into this demand. The reason why is because when we swept this liquidity, we made a higher high. We made a higher low, but we failed to make a higher high. So this is the true trading range right in here. We can still take this liquidity, take this low here, but maintain bullish structure. All right. I want further, lower prices on XXX USD because the dollar index, I want to come up into 101. This is an area that is going to be met here soon. liquidity. There's equal highs right here, and then our last imbalance move. All right. Not to say this can't go higher. I'm just saying that we're probably most likely going to come up into 101. So further dollar strength is what is expected. Now, what's going on lower time frame? We can see here 15-minute time frame. I marked it off the low, 1.08059. All right. What happened yesterday? Before I get into the current setup, what happened yesterday? Well, price, this area right in here, swept this high, this high, this high. This is considered an institutionally based buy to sell move, created that lower low. So what can we expect just based upon structure? A pullback to make a lower high. It's exactly what we got. We filled the gap from Sunday, and then we didn't make a lower low yet, but now we did. What this was, and again, this is exactly what I was talking about with the US dollar Swiss franc example. Many people would think, okay, this is a break of structure. I should be looking to pull back and buy it up. Well, understanding the higher time frame is still bearish. Swing point, swing point, swing point. Yeah, you can break structure counter trend short term, but this is probably just an overall pullback to go short again because the trend is still down. We're still trading short here. Now, if the trend was bullish and we were making higher highs and higher lows, right? So higher high, higher low, higher high, higher low, then yeah, this would probably be considered a counter trend break of structure to take long, because then this level would have probably come into our last point of return over here, our last sell to buy. However, that's not the case because we're still bearish. So we actually popped up to the exact pip to our last buy to sell. You just see how perfect smart money works. Is you can identify areas in which to sell and buy very precisely just based upon where liquidity is and where the volume starts. Okay, so the volume began right here to take this high here, so actually relatively equal highs to come up into this supply level. Okay, so we pushed up, we mitigated this buy to sell, we swept all this liquidity. Look at this. You know how many retail traders are probably trading this trend line? Oh, let's short, let's short, let's short, let's short. Nope, not going to happen. Take all that liquidity, provide liquidity for the banks themselves to continue to move this short. Where do they do that? Around key levels, 1.09, psychological level for this pair. So not only did they sweep liquidity, but they came into these psych levels that many retail traders probably are trading from, right? There's a lot of liquidity resting around these psychological levels. It creates the opportunity for them to place these large orders to continue to sell the market, right? So we saw this buy to sell yesterday. We made that lower low. Now, if price just blasts through this 1.08059 level, the setups that I'm going to talk about now are completely invalid. Why? Because we just zoom out. When price takes a significant swing point, when price takes all this liquidity, there's no telling what could happen. Sure, it could still pull back and continue short, but most of the time when it clears up this liquidity, a lot of stress is relieved and we have that overall pullback, okay, to take out liquidity from this time frame here, okay, to run that and potentially then have an overall pullback in the market to then continue short again, right? So if price comes below this level, I will not be looking to sell this anymore for the time being. But if it doesn't, then where can I be looking to take this? Well, we have three levels of interest. One was this last buy to sell volume, okay, before the imbalance move, before the structure was broken, that lower low was made. So I like to say we always want to be selling at premium prices. Is this premium price? Technically, no. However, when we are attacking liquidity and when momentum is so strong, oftentimes you don't see pullbacks that are, real pullbacks, meaning deeper pullbacks. You see shallower pullbacks and then continuations. That's an indication of a strong trend. So I have multiple entries here. So if you're risking 1%, which I don't recommend risking any more than 1% per trade, split these up. 1/3 of a percent, 1/3 of a percent, 1/3 of a percent. Okay, that equals 1%. If we lose this trade, we only lose 1%. But you're splitting your risk up. Okay, this is a valid area to be selling. We also have this last buy to sell. What this simply is just the bank algorithms repricing itself because we swept liquidity. We had a strong reaction back to the downside, reprice, and then continue. Not going to get into those details. It would take me too long to explain. So I'm looking, simply put, the last buying volume before the sell-off, deeper into premium. The open is where we want to be placing. Again, psych level 1.08700. And then if we go down to the lower time frame, if we go deeper into this, then I will have another position at 1.0876. And this is our last 5-minute buy to sell here. That actually came into this last point of supply. The reason I have stop loss above this high here, so at 1.09040, is because this is the lower high that created this lower low. So technically, structure will not be broken even if we come up into this wick, because then technically this would still be a lower high in the market, right? For then a lower low. So this is the structure in which needs to be broken before considering ourselves bullish. So that's where we place our stop loss. Okay, so those three levels, 1.08515, 1.08700, 1.0876. I am very interested in these levels. I do actually have sell limits placed at those levels. So there you go. Those are potential setup for you on Euro USD this morning.
Hey, Nate, let me interrupt you real quick.
Yeah.
So somebody asked a question that's probably right up your alley. Deepak said, how can I understand that there's demand zone, supply zone?
How can you properly understand what a valid supply and demand zone is? Is that the question?
Correct. Yeah, okay. That's what he said.
All right, so that's a good question. Valid supply and demand zones happen, and it kind of coincides with sponsored institutional candles. So let me just kind of draw one up here. You know that you're most likely going to get a reaction from proper supply and demand zones if these levels have, one, are following market structure, or two, in the last point of return, which I'll go over all this with an example here, three, have taken liquidity before. So for an example here, right? Let's just say we have an area price right in here, okay? And we're in a downtrend. We already established that we're bearish, so we should be looking for supply levels to play off of, right? Because supply is up here, demand is down here. Okay, so now that we're trading, let's say we're trading up, we're having a pullback, okay? And we have come into that level, and then we have broken structure. It's not going to be this pretty all the time. But let's just say that, we have push down, a little bit of a push up, and then we fall just like that, right? So now we're trickling back up into this level. So now, like I said before, supply and demand coincides with, sponsored moves. Oftentimes you'll see the, proper supply and demand levels within these sponsored candle moves. So we had liquidity that was run, buy to sell, break of structure that came into something else, most likely another level of supply. And then we created a new level of supply. Okay. Don't overcomplicate it.
I'll kind of interject. The way we really, we just call it supply and demand. What it really is, at least in my perspective, is market structure, right? So in a downtrend, we want to see some type of structure that's formed. Obviously, with a downtrend, we want some type of lower high. But within that supply or structure, we want to see some form of consolidation and then manipulation to the upside in the opposite direction of trend, and then a violent move to the downside in direction of trend. That, to me, is what creates the supply, the structure, if that makes sense.
Right. So having more, because you can't just trade, supply and demand. Well, I guess you can, but you have to have confluence within your trades always. So again, reaction off of another supply level, sweep of liquidity, break of structure. We're pulling back. We understood that we probably will see on a lower time frame an area of consolidation. That was our supply level to be, looking to react from. Now, let me show you an example on the chart. So let me get rid of these drawings. Euro USD provides a good example. This is an area of supply. Okay. We had a violent move, sweep of liquidity, coming into another area of supply as well. Okay. violent reaction back to the downside. Okay, I consider this violent because it's just a straight engulfing. It's just a straight reaction from our original level in the first place. We had our repricing, right? And then we had a violent move back to the downside. So this last consolidation block, go down to the 5 minute. Like I said before, based upon that example I just showed you, came into an area of supply, reaction, consolidation, fall. Lower low is broken, or excuse me, lower low is formed, structure was broken. Pull back up into that supply level is what we're looking for to take an entry short, right? We also have an intermediate level of supply, okay? This is our last point of, buying volume before the sell-off here. So these are areas in which price may be looking to short from. Because we're in a downtrend, we want to be looking for buying volume to mitigate. And that often follows large liquidity runs, okay? As we go throughout the day here, we probably will come across more supply and demand based examples.
Ooh, Nate, stick
Yes.
on EU. And someone actually just asked a really important question, in my opinion, that I don't think many people are necessarily looking at on Euro USD. And this is what we talked about actually last night, Nate.
Mm-hmm.
The demand zone on EU on the monthly time frame. I guess he's asking, sorry if I mispronounced your name, Kadia. Sorry, I apologize. That low there, I guess that's what he's talking about. So he's asking if that is, true demand.
Right here,
right?
or right here?
I believe that what we're trading into now, right? That one.
Okay, good question. So you have to, again, understand structure first before you can really identify true demand or true supply. So let's talk about structure here. And really quickly, again, we swept liquidity with this move. We made a higher high in comparison to this high. Okay, we pulled back, reaction from this level. We never made a higher high though. So technically we're making higher lows and lower highs. So it's like almost in a range. However, since we didn't make this high here, I would not consider this a valid demand level. Not to say that we can't react off it and go long. I'm just saying that's not my main focus. My main focus is where is the true trading range? Trading range meaning where is the true low and high that needs to be broken before direction can be really identified. And in this case, we swept liquidity, created that higher high, created a higher low, but we failed to make a higher high and we're pushing it back down. So technically the true trading range is in here. Okay. So that's why I could see this level being taken. Not to say that we can't react from it. Sure, we can look for buys around this level because this is
right. And that's the thing. We could create another higher low, react, and then trade higher, but then create another lower high and have one of those, the retail, what do they call it? Wedge patterns.
Yeah, I think so.
Right.
It would be something like this.
Exactly. Could easily wick through that low and then make a massive expansionary move, because ultimately we all know from a macro fundamental perspective, they're killing the dollar. Right.
Yes.
So
yes, definitely. That's why I do expect overall within the years to come, price pushing back to the upside. However, we can see here, area of supply. This doesn't mean that, we have a buy to sell and this just creates the supply. I would not have traded this short. Why would I not trade this short? Because we swept liquidity. The structure is bullish here. We broke structure and we didn't take out this low. We actually came into this level. And it was originally intended that we were supposed to, well, I thought that we would probably make a higher high just because of what we're seeing in here. So you don't want to take that short from this level. However, if we break structure back to the downside, if we just make a lower low in comparison to this, like a full closure, then this would be the valid supply that we came into. This would be the new supply. Okay. So supply and demand are basically the same thing as, institutionally based buy to sell moves, really just areas of high probability reaction. Okay. So yeah, guys, If you have any other questions, drop it in the chat. I can't see those.
You want
That's
to
why Aiden is
go ahead and
angry.
show the ACAT again. That's the only sell limit or position we have today for those who might have joined after. So that's a sell limit right there.
Yes, I have a sell limit here on AUD CAD 941. If you want to
2 hour
understand
up
why
close
I'm going to
candle.
sell it here, just go back and rewatch the recording after it's all over. I do have a buy limit here on USD Chef, okay, 9266, and I do
You can
have
see the reaction off that up close already.
yeah, I'll go over that in a
Chef.
second. And I have a couple sell limits here. Now, if we come down and even if we wick this blue line, this is a higher time frame low. Okay, a lot of liquidity resting below this low. We're going to take that out. It's just a matter of when. If we do it now, these sell limits are invalid. Delete them. But right now, we still have an excuse to come lower. So if we pull back, right, if we're going to be pulling back here, I'd like this level, and this level. If you guys just joined, feel free to watch the recording afterwards. You'll see my breakdown. USD
Obviously, the further premium we get on EU, that would be preferred, right? So trading higher into that level would obviously provide a better risk to reward. So, personally, I would probably do maybe half risk on that.
Yes.
That initial level.
Yes. Now I want to talk about something very important here with USD Chef. This is why top down is so important. Why would I not want to take a short from this level? Let's just say, correlate. Don't worry about correlation or relative strength or anything like that. Let's just say the dollar was bearish. It's not, but let's just say it is. Why would I not want to take a short here? Well, many people would say, oh, well, we have triple top, liquidity, retail trader stop loss. We have a buy to sell. Why wouldn't we want to take a short? It looks perfect. Smart money based concept. Well, one, overall structure is bullish, but two, we have equal highs resting above it. I don't like to trade these buy to sells when we have liquidity resting above it. Now, if there wasn't equal highs, I still probably wouldn't trade it because we're still very bullish. Dollar's very bullish. We're in an uptrend. We shouldn't be looking to short off. We have equal highs here. So that's why I'm not looking now. Okay. I'm going to go over this now. What if this happened? Then would I look to take it short? Yes and no. No, because we're still bullish. So price could easily, just come up into here, trickle, and then just keep going, right? Because we're overall bullish. But this is a valid sponsor candle. We'll take out this liquidity. We could have an overall pullback now. We could even see that now. I'm not going to be placing a sell limit from this level, even though it looks good. Buy to sell, liquidity, why not sell it off? Because we have equal highs. So this could easily just run these highs. However, I can still trade this short if two things happen. One, we see the reaction and we break counter trend structure. Okay, I would probably say that this is counter trend structure here. Okay, so if we close below this level and we pull back, we can short it off back down into our original buy limit. Okay, obviously stops above the high. That's one. Two, we could short this if one happens and we don't come into this first. If we come into this first, overall structure, we would understand that we're going long. This, let's just say this was a clear buy to sell that came, or that swept liquidity here, that came into this buy to sell. If we came into our higher time frame level, this becomes invalid because now we're looking to take it long. If we have room to go to the downside, room meaning here to here, if we have room, we can take this short counter trend. You can trade counter trend as long as you have room to go in the direction in which you're trading counter trend before the overall reversal occurs. And two, if you have a valid, proper setup that meets all your rules. So in this case, buy to sell, equal highs, we're run. Not going to just place a sell limit because we have equal highs here. But if we break counter trend structure, pull back, and we have room to go to the downside to take these equal lows and come into this overall level, then that would be our objective. Our shorting objective, the reason why we're shorting is because we feel it can come down lower, right? You don't short something or long something just for the sake of the setup. You want The reason why you're longing or shorting something is because you have a conviction that price is going to come to a desired level that you have pinpointed. If price already came into this level and pulled back, no, I wouldn't be selling no matter how good this looked, because we already came into our overall level. Should be looking to go long now. Now, let's just say that we were bearish, right? We were making lower lows, lower highs. Lower low, lower high, lower low, and then this happened. Buy to sell. We came into an area of supply here, then we fell and made a lower low. Then I would place my sell limit there. I wouldn't have to wait for the reaction like I am now, because we know it's already bearish and the structure is to the downside. Came into supply, buy to sell. We shouldn't come above this high now. Pull back, we could even just place our sell limit right there. But because we're not in a downtrend and we have equal highs, I recommend not placing sell limits off this level. Now we're seeing a reaction now. I would like to see a break of counter trend structure, a pullback, and then we can counter trend short this into our overall area in which we are going to long this position from. So hopefully that makes sense in terms of when you should and shouldn't place, sell and buy limits with smart money.
Yeah, and someone's kind of asking about trading style. Really, the overall gist of what we like to do is look at the markets from a top-down perspective and understand where we are heading on the higher time frames, the daily, the weekly, and where are the pools of liquidity? Where's the money on the higher time frame, right? And particularly for me, I enjoy the daily time frame, right? Because I'm more of a kind of intraday, intra-week trader, and so I love the daily time frame. So a lot of smart money traders get caught up. They wake up in the morning, open up their computer, and immediately head to the 1 minute chart, right? And oftentimes you get caught up in some of the intraday moves and can get tricked in terms of a bias where we're heading in terms of seeking liquidity in the market. And so that's why, especially on the weekends, guys, if you don't do it during the week, fine, but at least do your top down on the weekends, on Sunday. There's no reason you shouldn't be doing your homework on the weekend. That's what I do. I post Smart Money Sundays every single Sunday to our YouTube channel. I go over like 3 or 4 pairs and break it down kind of from a higher time frame perspective. So check out that series, but you should be doing these things yourself and understanding, especially on the daily, then the weekly, where we are actually heading. That gives you bias, that gives you conviction in your intraday trading when you're trading the lower time frame structure.
Exactly.
That makes sense.
As he mentioned, be sure to check out Smart Money Sundays. I don't think we've had a Smart Money Sundays since maybe mid 2021 that everything that was talked about has not played out. Meaning everything that he has talked about on every Smart Money Sundays for the past probably like 6 to 8 months has played out every single week. So be sure to check that. That's why, because he does his homework. We do our homework over the weekends. We take time to do top down. Be sure to check it out. It could just that series in and of itself could help you significantly.
You're
so
kind,
back to what
but
Aiden was saying really quick.
I'm not God, so I do get things wrong. But I would say the majority of the time, guys, it's pretty freaking spot on. So check it out. It's like a 15-minute video every Sunday. And it really helps our members, get that bias for the week. But, we do it for free. It's just on our YouTube. Okay, it's kind of a documentation of, our back testing and our studying each week. We can go back and look at, how those things played out during the week. So I think you'll really enjoy it.
Yep. And just like Aiden was saying, in terms of understanding higher time frame areas in which price can come to, I'm sure this is probably a very, good example of how a lot of traders, even if they're trading smart money, tend to lose. So if you guys are experiencing this, let me know. This is the example. So let's just say this is the daily time frame. We know we're bullish, okay? This is our point of demand. Maybe there's an imbalance, maybe a sponsored candle, whatever. So this is our higher time frame level in which we want price to come to. Sorry, I think there's a blender going on in the background. Apologize. So let's just say we come down, right? We're pushing down. We understand that this is the higher time frame level. Actually, let's do this. We're trending, okay? And, we're creating liquidity, whatever. We sell to buy. Many people are like, oh, the structure has shifted. We swept liquidity. Oh, we're looking to go long. The momentum is to the upside. We're overall bullish. And then guess what happens? Price just sweeps their liquidity again. So not only did we sweep this low, we swept this high maybe, and then swept the low again. Many people would think, oh, we're in seek and destroy mode. Sometimes that does happen. We take liquidity on either side of the market and we're just very choppy. But what that is that's just taking liquidity, having that overall pullback, as we said, instead of the counter trend actual break of structure to go long, just an overall pullback to then take price lower into the higher time frame level. So you could have all this noise here. You can break structure here, do whatever you want to do. But overall, your eyes should, you should be patient and your eyes should be down here where the actual demand is. Doesn't mean the demand is at the exact point. I'm just saying if there was a demand level, that's where you should be looking to take it because that's the highest probability to go long in your overall direction and not get caught up in the intraday noise, the fake outs, the counter trend breaks of structure that may not even be real. So it's so important to, not only understand the concepts, but know when stuff or know when if you're seeing a concept that sometimes it might not play out and why. Well, you can identify that very easily. Well, Nathan, you say to me, oh, if there's liquidity, I have a sell to buy. Not to say this can't go long. I mean, sure, we're in discounted price. We're looking to take this long and we're overall bullish. Sure, that could play out. And that's something that you could take on maybe a half risk position. But if you know that there's an area down here in which price is highly likely to come into, maybe a psychological level, very, very good looking, proper sponsored candle in balance, whatever you want to call it. This could easily just be an overall pullback, this move here, to then take it short into here and then go long. So that's why, a lot of traders do lose is because, they don't understand the higher time frames and they get caught up in the intraday noise, which stops them out a lot.
Yeah, guys, the YouTube is Ariel Fx, Ariel Fx. Someone was asking about, potential EJ, GJ, short-term sells. I don't know if you want to pull up EJ real quick. I mean, I could see the possibility of an intraday play off that 15-minute up close. If you look at the hourly as well,
sure.
We did have a liquidity run and following somewhat of a mitigation trend there. So I've just been a little hesitant, guys, to kind of start looking at selling the yen pairs just yet.
Yeah.
They've been on quite the tear as of late. But yeah, she's probably, I think it was, who was that asking that question?
So
I don't remember. It was probably looking at the 15-minute up close for intraday plays.
Yeah, let's just take a look at the higher time frame first. Let's do a little top down very quickly. We can just say on this time frame since May of 2020, we've been in an uptrend. We had major equal lows, run, liquidity, run. Many people were thinking, oh, lower low. Well, no, we're overall bullish. It's just liquidity run. Continue up. We're very, very bullish here. Now, we've got to go even further back. Where's the higher time frame liquidity? Right here. Let me just make sure I have the right price. Okay, so around that, again, psychological level, 137.50. Okay, you'll see reactions from these psych levels oftentimes because this is where the banks are probably going to be placing their large orders around these levels that retail traders are trading. They grab liquidity, which creates liquidity for themselves to place. So we came up, we actually did take out that high. You can see we did take out that high. So I wouldn't be surprised if we got an overall pullback, if we were, short-term bearish. However, the counter trend even here on the lower time frame, meaning counter trend this way. So just draw a trend line like that. It's still bullish, right? So we still want to be trading this long. I don't think that we're going to be going short anytime soon. We could because we did technically take out the high, but we're still very, very bullish. Now, the only way I would probably look to sell this is, we have relatively equal highs in here, is if we maybe run the highs and then break structure here. That would probably signify to me that, okay, liquidity run, we took higher time frame liquidity with this blue horizontal line, we have broken counter trend structure. Now for the short term, we can be looking for sells, right? Sells back down into discounted price, because we know we're overall bullish. We don't suspect price to come below here because we're bullish. So we can be trading into these discounted levels to then take it long again. So counter trend, long, higher time frame and lower time frame is still bullish. I wouldn't be looking for shorts here, in my opinion. Yeah, I mean, we do have relatively equal lows, but that doesn't mean it's going to be taken out immediately. We have all these highs here. I just think that continuations, XXX, JPY, are going to continue up. This 15-minute up close here, I don't think that's valid, in my opinion, just because, I mean, the trend is to the upside. So yeah, you'll see these really nice looking buy to sell candles. We could get a reaction from it, but what's your risk to reward looking like? And what's the probability of this actually playing out? Because technically we're still very bullish. Do we really expect price to have a strong conviction that price is going to react from that level and go short? Probably not. I mean, this could easily just keep going, right? Because where's the trend? It's the upside. So if we were in a downtrend, right? If price did something like this, and let's just say we were a downtrend overall, right? And price, came up into here like that. We made a lower low. We came up into a supply level, and then we had a counter trend, last buy to sell, and then we had this buy to sell here, right? Then yeah, that would be a valid area to take price short, because we're then bearish. I only look for these smart money based trades in the direction of trend. Yeah, it looks good for a buy to sell, but one, we never really took any liquidity, and two, very, very bullish. But
yeah, that's the thing. Oftentimes you'll see these very clean looking buy to sell candles, right? Or up close candles or down close candles, whatever you have. And it's almost always in the opposite direction of trend, right? So, you can't get kind of tricked by the eye candy there. You have to, keep in mind your higher time frame bias and perspective. I still think we have, another run at least to the upside on these yen pairs. So,
yeah,
we really want to be, trading with the higher time frame trend until they really give us a reason to not do so anymore, right?
Yep. I think that price will ultimately come up and take this high here on GJ. I don't want to be shorting. I want to be looking for buys. So understanding market structure, we're bullish. We haven't drawn liquidity here, meaning probably, that's the next target. We're going to be attacking that high here. What do we want to do? Well, we want to be looking for opportunities to buy this. This doesn't mean to just, look at random levels and be like, oh, I'm going to buy. If nothing's like really standing out, looking pretty, wait for like liquidity to present itself, right? And then just take it off of, the pullback into the sponsor candle move. So that's something I would want to be looking for. I want to wait for liquidity to, become apparent, right? Sweep that liquidity in the opposite direction of trend, continue in the right direction of trend, break structure, pull back, and continue.
I also wanted to throw in, when I was just last speaking, the sponsor candles, and at least we have a rule-based system for sponsor candles, but a lot of people just think it's the last, up close candle before the move down. All right. And that's just not necessarily the case. What we've found is the highest probability sponsor candles, they have to take liquidity and they have to have a violent reaction in the opposite direction in order to be a valid sponsor candle. All right. And so oftentimes that run on liquidity, okay, then creates the imbalance, the inefficiency in the market. Okay. So you have the inefficiency, you have the sponsor candle that took liquidity. That makes it a much higher probable sponsor candle than if you're just taking something off of the last down close candle before the move up, or the last up close candle before the move down. And that's just kind of a misconception in the smart money space, is that, rule of thumb, you have to take liquidity with a sponsor candle before a move in the opposite direction. And then finally, in my opinion, sponsor candles need to be created in a very specific time of day. Okay. And we'll get into that, I guess, more next session with time and price. But in my opinion, the most valid sponsor candles not only take liquidity, not only have a violent move in the opposite direction after having taken liquidity, but it also happens at London Open and New York Open. Okay. And so if you look back and you're looking to trade off of a sponsor candle on Euro USD, and that candle was placed at what was printed at 7 p.m. New York time, Asian session, then that's a red flag to me. Okay. We want to see that sponsor candle that we're looking to play off of having printed at 2 a.m. or 3 a.m. Eastern, right? London Open. We want to see that having printed between really 7 a.m. and 9 a.m. New York. Okay, because that's when the session opens occurred. That's when we see, or at least 7 to 9 is obviously, well, 7 to 11 is New York overlap, but we're getting New York Open coming in at 8:30. So we want to see that manipulation and the liquidity runs at the opens of sessions. All right, so don't be taking trades off of, down close candles on Euro USD that happened at 8 p.m. at night, right? This is, it's a London session pair. We want to see that move happen at London Open or at New York Open. So sorry, kind of long-winded there, but hopefully that makes sense.
Just to clarify what he was saying about not taking it off of the last buy to sell. Did this candle here take any liquidity? No, it didn't. Yes, it's the last buy to sell. Many people can probably mark that up. But I tell them, where's the start of the move that actually grabbed the liquidity? And what time did that start? Okay. Liquidity here. This high, this high, this high. Where did the move start to take those highs? Right here. That's where it started. Not right there. Liquidity has already been grabbed right there. Started right there. Why did we come up into that level? To the exact pip. Literally to the exact pip. It's because this was the start of the buying volume that we needed to mitigate prior to going short and continuing with the trend. Okay. So it's not just the last buy to sell. It's where the area in which price took liquidity. If we're taking liquidity, we have to drive price up to take that liquidity. How do you do that? You have to place so many buy orders in the market. That exact precise level that you're placing these buy orders, and they, meaning the institutions, they got to get out of those positions. They place them right here, not up here. They're probably distributing and offsetting or offloading their orders to go short, but the majority of the bulk of their orders are right here. That's where we need to get out, or where we need to get in as smart money traders to go short. This is where they need to get out to then continue short. And what time did this occur? Start of the move, 5 a.m. Eastern time. That's London session. I say anywhere between like 2:30 a.m. Eastern to 10:30, 11 a.m. Eastern time is if you find sponsor candles during those specific time periods, between those times, it's most likely going to be valid. But what I really like to see, 3 a.m. London Open, and then anywhere between 7 and 9 a.m. Eastern, London, New York session, changeover for a New York session.
Someone asked if we take news into consideration when we trade, not in the sense of, there's high impacting news, I'm scared, I'm sitting on the sidelines for the day. No, not at all. We take it into consideration, like with an understanding that let's say there's monetary policy next week, or what do they call it, the EU ECB / manufacturing, whatever it is. That's why you need to look at the Forex factory, a week or two in advance, so you understand that likely that news is going to create the excuse to inject the needed volatility into the market. And so oftentimes what happens, week to a few days before that kind of event, is they have accumulated or distributed orders and are getting ready and priming for, a big volatility injection created by that news as an excuse. Okay. And so I would recommend looking at what the news is next week right now with an understanding that, okay, we should be printing some clues as to where price is going to go. And news is simply going to be the excuse to push it in that direction that the technical analysis shows you it's going, or where the liquidity actually resides, right? So if you have equal highs somewhere, you have a high impacting news event, it's likely going to the excuse to go ahead and take out the liquidity, right? So, that hopefully answers your question.
Yeah, definitely. If you have buy to sell break of structure, let's say your sponsor candle's here, you're kind of just trickling in here somewhere doing whatever. Let's say ECB press conference comes out or some sort of high impacting news. Well, the excuse to inject volatility is going to be through that news to come up into that level in which it was already going to go to anyways. So people get scared of news and like, oh, I'm not going to trade during news. Or it's just because they don't understand how the markets really work. News is not just something random like, oh, the news comes out, oh, we're going to go like this. Just crazy volatility. No. If we're going to short off from here or whatever, the news is going to create the excuse to push up into those levels. Inject volatility to then continue. If there was no news, it would have done it anyways. It just creates that excuse to, take liquidity, inject volatility, continue with the overall trend. So that's really what I'm looking at, guys. Euro USD, I'm looking at those shorts. Split up your risk if you're taking them, those 3 levels. 80 CAD. I like sells from 941. USD Swiss franc. You see? Look, exactly what I was talking about. We could easily just continue up here. Not a valid sponsor candle. We have a draw in liquidity. We have equal highs. That's why I have to wait for a reaction during these levels. All right, if we were in a downtrend, then yeah, I would just take it off of that level. But we're not, so I have to wait. But then we have a buy limit at 9266. So those are our levels right now. I will stop sharing if you want to go over anything else.
I don't think I have anything in addition to what you have. It's been a very, very, obviously there's no volatility right now in the markets, and it's been kind of a choppy couple of weeks. So unfortunately, obviously the idea is to, have the setups presenting themselves so we can take live trades together on these sessions. And, that'll always be the goal. All right. But we firmly believe that, education will be the root of your success, not necessarily just handing out, trades. Obviously we will, if it presents itself and we're taking a trade during the session, obviously we'll let you know. But really glad that we could get in this kind of education today and answer a lot of your questions. Obviously we have our YouTube channel. So if you're interested in that, head on over. We have a bunch of series, not just Smart Money Sundays, but, going over Wyckoff and smart money concepts. We have a whole series on that. So lots of education, just, placed out there for free for your access, because we want to see everybody succeed in these markets. But that's all I have. I don't have anything. You've pretty much covered everything that I have on the charts, Nate. So,
yeah, guys, we're always at your disposal. You don't have to be a part of our VIP community, even if you want to ask questions. We're not going to charge you for that, obviously. Questions are free. Feel free to hit us up. I'd be happy to sit down and discuss something that you're struggling with you to point you in the right direction. We're always here for you guys. So if you guys don't have any other questions, feel free to hop off. I guess I can go over just a few more in the chat really quick before we jump off here. Can you check NASDAQ? Is Smart Money Concepts apply? Smart Money Concepts applies to everything. It's all based on institutional order flow, market manipulation, happens on any asset class. You guys apply these concepts on stocks. Yeah, they're seen on, again, any asset class. I don't personally trade stocks. I'm more of just straight Forex. I don't even trade gold, really. But again, everything, order flow manipulation, seen on any asset class.
Someone mentioned Solana.
Yeah, Solana.
Yeah,
we
you're right.
we actually own quite a bit of Solana. We feel that's going to take off quite soon.
Yeah. See anything else? Beautiful. I think this is obviously going to post later on today, right, Nate?
Yes, it will. It'll post for sure. Oh, good question. Do you use the dollar index for your analysis? Yes, I do look at the dollar index. Just like I went over with you guys, and looking at price to go to 101. Obviously, the dollar index is a collection of all the dollar-based pairs. So yeah, price going to 101 on the dollar index. That's my overall bias. So continuing with dollar strength, we should be looking for XXX to short off. because we have a lot of liquidity on all those pairs to the downside. So any last questions before we hop off, guys? Thank you again for joining. It's always a pleasure. I know in the recording that Cam did for us, he mentioned that we were doing a giveaway. What we're going to be doing is we are going to be doing giveaways. We're going to start it next week because we're going to take something that we talked about this week and ask it next week for everyone who has joined this week. You guys will have the advantage over people who didn't join this week to answer that question and earn a free $100. So be sure you turn in next week. We're giving away $100. So hopefully you guys have been paying attention. So I think that's it. Thank you guys so much. No, that $100 was not a cap. We'll do it next week. If you join next week, if you answer the question correctly, you have to be the first one to answer. But if you can do it, then yeah, we'll definitely hand it out. We handed it out last time. We did two $50 winners. So, all right, guys, have a great rest of your day. Have a great trading session. Hit us up if you have any questions. We'll be happy to help you guys in any way we can.
Yeah, so great session, guys. Appreciate it.
Great one. Take care, guys.
See you next time.